Good day, everyone. Hope everyone's doing well and staying safe. My name is Fred Gaudius, Senior Account Director at Zeldis Research Associates. Just a few quick items here before we kind of delve into the presentation. The first is that we are, as many of you know, a full-service custom market research company at Zeldis. We specialize in the insurance and financial services industries. This is not a capabilities deck. I will say zero about the sales process, but I will say just that this is something that we do routinely throughout our sort of cycle as a company, as we do self-sponsored research on emerging issues, and this is a topic that, as someone who helps lead the Zeldis financial and insurance research practice, I'm really excited to share these findings with the group today. If anyone has any questions, like Brad mentioned, you can type them into the chat. He'll pass them along to me at the end of the presentation. We do have an hour scheduled for this. I do not think the presentation will take a full hour. I think we'll probably be finished with the presentation within maybe 35 to 45 minutes. So you'll have a little bit of time left back in your day as a result of this booking this hour with me. So I'm always happy to provide that. So with that all being said, welcome to the presentation. We'll be talking today about the impacts of the COVID-19 pandemic on the financial marketplace with respect to different audiences, agents, brokers, and financial advisors today. So obviously we all know the background in this space, but to sum up recent headlines, the recent pandemic has had multiple high-level impacts on the advisory and the insurance industries, which of course are a crucial support for the overall U.S. economy. And as a result of a number of factors related to the COVID-19 pandemic, including the economy largely shutting down for a time and the resulting global uncertainty, we have obviously on this page a few headlines here and data points just from things you could pick up off the internet. There have been significant impacts on the world and on these industries as a result of the pandemic. So, for instance, new unemployment claims that were routinely in the millions per week were commonplace earlier this year. Even in September and October, nearly 1 million Americans are filing first-time unemployment claims. And of course, for business-facing audiences, there was earlier this year some significant government stimulus, but it offered results that perhaps were imperfect and small businesses in particular seem to have been more heavily impacted. As a result of all this, of course, financial markets, as we all know, went on a wild ride, right? They were down 30% in March and in April, only to recover most of their gains later in the year. And as we talk about this now on November 19th, there's a lot of uncertainty in those markets, although things appear to be a little bit better. And of course, with the fact that we're currently in a second or third wave, depending upon where you are in the pandemic or in the country with respect to the pandemic, there are issues with respect to that in the months ahead as well. So we saw this, and we decided at Zeldis to conduct some proprietary research, the findings of which, of course, are the focus of today's presentation. So back in August and September, fairly recently, we conducted 16 30-minute one-on-one telephone interviews, 8 of which were with financial advisors, and the other 8 are with a combination of insurance brokers and more sort of specialized P&C type agents. We understand, of course, that these audiences can be different in nature. There's a difference, of course, between an advisor, a broker, and an agent. And we were prepared to supplement the sample if necessary if we noticed really big differences between the two groups. But I have to be honest, in fielding our research, we felt very comfortable in the audiences pretty much telling us similar stories. We do, throughout the presentation, call out differences by industry, and we'll do that throughout. There are some slides that are advisor-specific. There are some data points which are broker and agent-specific. But for the most part, really, the story we're about to tell you is a story about the industry as a whole. It's high level, it's impactful, and where there are differences, we'll call them out. But really, we were struck by the significant amount of similarity, really, between the audiences. On the right-hand side of the slide, you can see our respondent profile. It's financial advisors. We just ended up recruiting a mix of independent broker-dealer and RIA channel advisors. It is the case that other channels may behave differently, but we selected these audiences thoughtfully because we felt that they could speak to a wide array of products offered by a wide variety of carriers. So that was kind of what we talked about. All the advisors were very tenured, had a significant amount of assets under management. The advisors were all male, ranging in ages from their 30s to their 60s. We hoped for 1 or 2 female advisors. Sometimes that's a struggle to find them, though, and that was the case in this research. The geographical distribution on the advisor side, 2 in New York, 2 in New Jersey, 1 in Massachusetts, 1 in North Carolina, 1 in Illinois, and 1 in California. On the bottom of the right-hand side, you can also see with brokers and agents, there was some overlap. 7 sold health and life. 4 were personal lines, 4 were commercial lines, and of course those numbers don't add up to 8, so you can see that multiple of our participants in that space sold multiple lines of insurance, which is a good thing. Also, 4 sold disability insurance and 4 sold LTC insurance. Very tenured group on the insurance brokers and agents. All had at least 16 years in the industry. Most had at least 20 years of experience in the industry. Here we had a nice split by gender. 4 of our respondents were female, 4 were male, and the geographical distribution on the broker agent side was 2 in New York, 2 in New Jersey, 1 in Georgia, 1 in California, 1 in Pennsylvania, and 1 actually in Wisconsin. So we had a nice geographical split there on that side. So we wanted to get a sense of baseline, and I think we all probably know this on the call, but how we worked before the pandemic, with a couple of exceptions, everyone we spoke with in this research worked out of an office before COVID-19 happened. A few, maybe 2 or 3 of the 16 worked 100% remotely, but the vast majority were office-based before the pandemic, and they traveled frequently, regardless of whether they were working from their home or working from an office. They traveled frequently to visit clients and prospects in a variety of settings, so lunch, dinner, company-sponsored events like golf tournaments and other social settings. Most of the travel was regional and required a car, although a couple did have some clients across the country that required plane travel. So this level of interaction at the time, prior to the pandemic, of course, was valued. At the core of what brokers and agents and advisors do is client relationships. And it's always important to maintain those touch points, to remind them of the value proposition they provide. And really, when you're talking about the folks that we spoke with, they generally speak with affluent clientele, so it's expected and considered a perk of that advisor and broker type relationship. With respect to differences by respondent type, maybe there was a bit of a trend where advisors and brokers reported more frequent travel before the pandemic than the P&C agents, but even the P&C agents were traveling a ton. It was just a little bit more local in that sort of hometown P&C sort of environment. The most well-traveled folks would fly every 4 to 6 weeks to visit clients, but that's also sometimes because these types of respondents choose to live in a different geographical area than most of their clients. So this is just baseline, and we'll get into how things changed in just a couple of slides. So let's talk a little bit about how all of the above changed dramatically in mid-March when the COVID-19 pandemic shut many things down, leading to dramatic impacts, and we'll focus here on the day-to-day in the first section of the presentation. Throughout the presentation, we have representative quotes. We like to bring these in for a little bit of color and context. So you can see here this financial advisor said that they stayed home for a month and started going back to the office probably in about April and realized this was silly. So driving an hour round trip to go sit with a bunch of people who are wearing masks. In an executive space, what's the point? I moved out of my office, left it there as a meeting space, and brought my monitors home with me. And this health insurance and commercial lines broker mentioned that it changed 100%. They're not holding any in-person meetings, so it's 100% over the phone or via video conference. They're doing a lot more video conferences rather than in person, and these days it seems as though they've got 3 or 4 conferences a week where they're on either WebEx or Zoom. So much like probably what those of us watching this webinar are dealing with on a day-to-day basis, you can see the lives of advisors, brokers, and agents have actually changed over the last 8 to 9 months in a very similar fashion. So with respect to day-to-day work impacts, for many, COVID changed a great deal about how these folks do their job. At least half went from working in an office full-time to working in an office full-time to working at home full-time, and we'll get into what that means in just a couple minutes. Others, and this is a minority of respondents, but a few continued to work from an office, although everyone really did have a break probably in March and April, but a few came back in May and June. When they came back to the office, they had to maintain safety procedures. So basically, they worked in a way that they saw virtually nobody else in person while working there. It was more of a choice that they felt like they could work better from an office, just from an actual tactical, getting work done sort of perspective. Most of their actual interaction with other people, although they were in an office, was still being done either by phone or Zoom. And like I mentioned at the outset, some others were working remotely before the pandemic and continued to do so. So nothing really changed for a few folks that we spoke with here. They were remote beforehand and continued to be remote. Almost all interaction with existing clients and prospects moved to either phone or Zoom, although a few mentioned maybe seeing a few clients in person since the pandemic hit. This was very person-dependent, geography-dependent, and client-dependent. It was almost like they had to feel out their clients to make sure they were okay with an in-person contact. And if they were, then they maybe met at an outside restaurant where they knew they could maintain social distance, or even on a park bench just to talk with them nearby, just to have a conversation about how things were going with their clients in these times in person. This carried implications, of course. Yeah, clientele, especially for financial advisors, clientele tends to be older and a bit more varied in their tech savviness, and sometimes the advisors themselves are in the same boat. So there's a learning curve with respect to the technology, and you can see that here in terms of the implications. Even when the technology worked, it didn't feel as real of an interaction for both the respondent, so the insurance or financial professional, as well as the client themselves. So you can see a representative quote here from one of the brokers we spoke with. It's not the same as slotting a half an hour to go sit with a client and have the ability to just let the conversation roam. There's a lack of just nonverbal cues. There's a lack of just for lack of a better word, the realness, quote unquote, of the interaction. And many of our respondents mentioned that even when the technology wasn't an issue, there's a struggle with respect to just having as meaningful of a conversation with their clients and their prospects. Lead generation and marketing, also definitely impacted by the pandemic, although I will mention that more established professionals experienced a bit less impact. It depends on sort of your business model. So if you're a professional and you're dependent upon referrals, you're probably fine because referrals don't change and in fact increase as a result of the pandemic. But more traditional means of prospecting, like local events, social opportunities, professional association meetings, and sometimes those are of significant importance to some of the people that we spoke with. Those were shut down by the pandemic. So, for instance, a local hometown P&C agent or a P&C and life shop, they definitely experienced greater impact from a lead generation and marketing perspective versus really all of the advisors and the subset of agents and brokers who are more national and regional in their focus. It's probably not a surprise because the clientele of local P&C and life agents we find, just as we look through our books of business ourselves as people in the industry, that they themselves were impacted disproportionately by the pandemic and continue to be impacted disproportionately by the pandemic as well. So what were the day-to-day challenges of the pandemic? Well, they all kind of fundamentally align in terms of insurance and financial professionals having to learn a brand new way to work. Some specific challenges, there are a few. One of them is technological issues and a learning curve, especially for people that we spoke with who tended to be a little bit older. They struggled at times with learning about handling calls on Zoom or working with back offices at their own firms or working with carrier partners or provider partners who are themselves now learning to work remotely. So there was a big learning curve for everyone, but it was probably a burden that we found to be most heavily borne by those who were doing more in-person work in the first place. Second, there was an expectation of being on all the time while working from home and just making sure that clients can remain firmly committed to continuing to work with them. There's, combined with interpersonal challenges and staffing limitations, just a great deal of struggle there with respect to just making sure that everyone within and from a client perspective understands that, just because we're working from home as advisors, brokers, and agents, we're not on all the time. And dealing with the fact that maybe not everyone in the back office felt the same way that the advisor, broker, or agent did, led to some challenges as well from a day-to-day sort of work perspective. One respondent I spoke with mentioned some specific interpersonal challenges. One actually moved back to the office even though there was nobody else there, just to focus better, because working at home was driving them crazy. Their family was driving them crazy, so they mentioned that they just went to the office and put a mask on if someone else came in. But they were in an executive space, and they just felt like it made the most sense to keep staying in that office to keep things focused. Another respondent that we spoke with mentioned just needing to be more patient with their back office because applications are taking much longer to be processed than they usually would take. So just some one-off context that we like to talk about when we walk through these presentations to help add a little bit of individual context as to what people are going through. On the flip side, we noticed some newfound efficiencies. We asked people to kind of put on their silver linings caps for a second and think about some ways that they've learned to be more efficient as a result of the pandemic. So the first one that we heard a lot of the time, really across the board, across all these audiences that we spoke with, was having more time to manage clients. So you can lose an entire morning for a client meeting prior to the pandemic, 45 minutes getting there, 15 minutes finding traffic, an hour talking to the client, another 15 minutes getting to your car, and another hour driving home. All of a sudden it's lunchtime, and really all you've done is service one client out of your entire book of business. Well, since the pandemic, as a potential silver lining, a few brokers, agents, and advisors mentioned, well, we're not commuting anymore. We're not traveling to see clients anymore. We can actually do a better job cycling from client to client than we were doing before the pandemic. The second is becoming more facile with computers and video conferencing, particularly for maybe more seasoned advisors, agents, and brokers. This is an important aspect of learning how to manage, just out of necessity, the issues with respect to Zoom, Skype, and other issues such as other platforms such as that. And last but not least on this slide, is covering new ways to do business development. So from that perspective, like learning a new CRM, learning a new platform from that perspective, there's just a great opportunity for insurance and financial professionals to learn new ways to manage their business. Carrier and provider interactions, another slide here. These have fundamentally changed as well. A few advisors mentioned that wholesalers are not upping their game, and this was an advisor-specific finding, but carrier and provider wholesalers are just not getting in front of producers using Zoom or other methods at the present time. A few also mentioned that there were a couple of carriers that were keeping their wholesalers in contact with advisors on the golf course, and that was positively regarded, thinking, well, golf's a safe activity in a pandemic because it's outside and you maintain your distance for the most part. So that was positively regarded by a few folks that we spoke with. Also, some differences by company just include logistical differences in how some carriers and providers are operating right now. Quite a few brokers, agents, and advisors alike are mentioning right now that it's harder to get business through some companies since March because the carriers and providers themselves are struggling with the new work environment and themselves having everyone on their back office working from home. So the bottom line is those carriers who are keeping advisors, brokers, and agents engaged with their offerings are earning a disproportionate share of their business right now at the present time. And we'll have more on product recommendation shifts in the next section of the presentation. So let's move on to business and products and the impacts of the COVID-19 pandemic on these factors of how insurance and financial professionals do their job. One advisor mentions a ridiculous number being up 38% year over year and saying they really don't know why, but it's been like a mass flock of new clients for their business to the point where they've had to bring on other people to help with some of the business. On the broker and agent side, and we'll get to this difference in this section, but there's a little bit more ambivalence about the current situation. They themselves feel strong, but they're concerned about potential future impacts on their business in the future. So this is more specific to health, life, and P&C here on this quote. So let's focus on the advisors. Really all of the advisors that we spoke with in this research, and again, we're speaking with higher end, established, high AUM type advisors, their business is up at least a little bit, or in some cases a lot, year over year. With a reminder, we interviewed these individuals in September, so it's possible even by November that business is up even more as the markets continue to go up a little bit in the last couple of months. From a product perspective, I don't think there's a ton of surprise here in terms of increasing focus on individual stock market positions and names. I'll just tell you the sectors they brought up. It's all tech and healthcare. Not a huge surprise here, but those are the areas where I think we're seeing the biggest movement of funds and positions at the present time. And also, just with respect to the interest rate environment and volatility, we're seeing more movement in terms of structured products and buffered and structured annuities. We can tell you from a Zeldis perspective, a lot of our clients are interested in that sort of research as well. So that's not a particularly big surprise, I think, from the financial services perspective. Like I mentioned a couple of slides ago, on the insurance side, brokers and agents are a little bit more mixed. The hometown P&C type agents are the most concerned, and they're most concerned about competition for their services. So from a product perspective, we're seeing a change in this space as well. Brokers and agents, first on the P&C side, are reporting increases in a few specific types of policies. Business continuation policies is one. Pandemic insurance is a second, and cyber insurance is a third. Probably no big surprises here, but it's nice to hear it from the front lines that this is absolutely what we're seeing in this space. And from a health and life perspective, virtual medicine and telehealth offerings, we are seeing a huge impact in the telehealth space. That's actually our other at Zeldis proprietary research we did this year was in the space of telehealth, and not surprised to hear it in this research as well. That's a big thing, as well as ancillary non-medical benefits like hospital indemnity and term life being offered to group clients on the health and life side. So big movement there. Increases in participation really across the board for these benefits also are being reported by the people that we spoke with in this space. Getting a little bit big picture, threats to the company, threats to the agency, threats to the firm. We have a few to talk through here. The first, and this is more specific to advisors, is just a feeling, a qualitative feeling that the markets and the economies or in the economy itself are increasingly decoupled right now. Markets are sky high, the economy is struggling, and many advisors are foreseeing market returns over the next 5 to 10 years to be very muted. And they're concerned, frankly, about finding a way to make money for their clients. They're concerned about the traditional ways of doing this becoming less and less attractive to them. And there are some concerns that are real among the advisors that we spoke with in this space. All the audiences we spoke with do business with clients who are small businesses, and small businesses are hurting right now. The viability of small businesses, the major concern in the short term. Some are also concerned about just the nature of the businesses that survive. Like, for instance, will small business owners in the next 3 to 5 years become more price versus value driven in their decision making? That is, will they just think about the lowest price point for the products and services they're offering themselves and their employees over time, from both a product and from a relationship perspective? I think this is equally kind of a big deal here with respect to small businesses and whether they can survive moving forward. Finally, there are obviously health issues. We're in the midst of the third wave of the pandemic right now, and they're worried about their clients and their clients' employees staying healthy and employed, neither of which is particularly guaranteed right now in a time of both global health pandemics and associated economic uncertainty. With respect to differences by industry here, obviously brokers and agents are facing sort of different challenges in the sense that in the health, life, and P&C space, they're working with companies that may only be afloat right now because of governmental aid, and it's unclear to the extent to which additional governmental stimulus will happen in the months ahead, so that's obviously a fundamental concern and a threat to how these particular agents and brokers do business themselves at the present time. On the flip side, we also asked about opportunities, and again, these are opportunities for their own businesses, so the advisory practice, the agency, the firm. The first is that everyone we spoke with is now thinking more critically than ever about how they can adapt themselves as an agent, as a broker, as an advisor, to how their business can adapt, how their working style can adapt, and what they can do. They're just thinking very critically right now about how they can change and be flexible to meet their clients' needs at this very critical time. So that's a really optimistic thing and a real opportunity with respect to how these particular audiences are handling their business. I mentioned healthcare and tech. a couple slides ago. There are other opportunities, as previously discussed, from a product and a solution perspective. So there are definitely opportunities from a sales perspective. And there are also opportunities from a marketing perspective. Brokers and agents in particular, and advisors, although they operate differently, feel the same way about this as well. Just think there's going to be more opportunity for a shift in obtaining new business in the next year or so, because they see other professionals struggling to maintain contact virtually. They themselves think they're fine, but they think the industry as a whole is struggling. So they're finding ways to perhaps find BOR, broker record opportunities, and gaining new clients from that perspective as well. Our final section relates to the future of the industry, so let's get right into it. One financial advisor cracked a really interesting joke about shaking hands. It'll be a while before they can do that, and kissing old ladies, it'll be a while before they have to do that as well. And a broker here mentions that, and here I'll mention, we try to keep politics out of the conversation, but this broker went there and said that they're hoping they can find a way for everyone to be able to be insured so they don't have to worry about having coverage. And I will mention that there are other brokers in the health insurance space who felt completely differently about this particular part of the conversation. Was about the Affordable Care Act and the individual marketplace. But other brokers, of course, feel differently. But this was just one quote that we thought was interesting, illustrating the range of opinions about the future of the industry. So there are 5 impacts. We'll have one slide on each of them. The first is industry consolidation. There's clearly already been a movement in the industry where lower performing advisors, agents, and brokers will be forced to stop doing what they do. But a further and accelerated separating of the wheat from the chaff here is considered actually a net positive for the industry, because there will be, among those who remain, an increased quality of service offered to clients and to customers. The second is an increase in strategic partnership. So this is kind of like after number 1, you're going to see number 2. Those who remain in the business after the industry consolidates will have done so because these are the ones who've learned to adapt to the new normal, both technologically and practically, and those who've continued to offer value for their clients. Like number 1, this is another net positive for the industry, because better service to clients is always a positive thing. So that's so far so good with respect to impacts on the marketplace. The third is an accelerating shift toward a new way of interacting with clients and working. So even before the pandemic, many mentioned more of their traditional client outreach was moving to phone or Zoom, for better or for worse, but this pandemic really only served to accelerate this. So advisors, agents, and brokers believe that at least in the medium term, they're going to continue to operate the way that they've been operating throughout 2020. It's unclear for us at Zeldis as experts in this industry whether that's a net positive or negative right now. We can only speculate. I mean, this is a relationship industry. There's no substitute for in-person interaction, and it's important to take the time to think about whether, even after the pandemic recedes, things will come back to the extent possible. Bill Gates was in the news yesterday saying that he feels that 50% of business travel will not come back after the pandemic. It'll be interesting to see how this industry reacts to that, if that does end up being the case. The fourth impact are product changes. We talked about this earlier in the conversation, so a shift toward voluntary offerings, having increased participation there, pandemic and cyber insurance, buffered annuities, structured products. To the extent that carriers and providers can evolve to provide the needed solutions, this can be, although maybe we don't know yet for sure, but this can be a net positive for the industry. And then finally, impact number 5, a reminder that this research was fielded prior to the election. Depending upon the election outcome, it now appears to be the case that it'll be probably more on the side of tax laws changing significantly more than healthcare changing significantly. That will, of course, have some impacts on both individuals and business owners. Now, typically a disruption to markets and something related to tax laws is usually not a positive for the industry, although it's really still a very to-be-determined type of situation. It's still not clear to us yet how the industry will evolve to handle those sorts of things moving forward. So just a few more minutes to talk through how we stand on this in summary. In a summary of key takeaways here, the first that we talked through in this presentation is that advisors, brokers, and agents alike are all learning how to adapt to a new way of handling things. It's both from a day-to-day perspective and a big picture perspective. They're facing new challenges, They're struggling with things they've never struggled with before. Many of them have found a way to win over the last 20, 25, 30 plus years, and they're trying to find a new way to win. I think it's important that we all, in engaging with brokers and agents and advisors, are patient with them as they work in this sort of dynamic. That being said, brokers and agents and advisors have also uncovered new ways to be efficient. Many of the people we spoke with in this research were pleasantly surprised how well they were handling things. And they're finding some elements of the new normal to actually be appreciated, like losing the commute, losing some of the travel, although I think many do miss the travel at this point. So there are efficiencies, there are good things, although it has been a struggle. There's definitely a flip side to the coin as well. Third, the bottom lines of these folks are mostly stable, perhaps surprisingly stable, although this does appear to be career stage dependent. A few of the people that I spoke with mentioned, something along the lines of, Fred, I'm 54 years old, for example. I really wouldn't want to be 29 right now in doing this job in this industry. So I think that's an interesting key finding, that it's very career stage dependent how well advisors, agents, and brokers are handling the current situation. Given everything that we've been talking about today, there are both threats and opportunities right now for the advisory and insurance businesses, and optimism for the future as a result of this is cautious. There is optimism. There's optimism, particularly that if the pandemic can find a way to recede in 2021, things will come back to a new normal fairly quickly. But at the time we spoke with them in September, optimism was certainly very muted. And finally, number 5, the industry will change. It's going to change in many ways. These changes will last in the medium term, and many of these changes may be positive in nature. So there's not a lot of conversation around the sky is falling or pessimism or negativity among the advisors, brokers, and agents that we spoke with in this research. It's actually the case that they feel like, yes, this is changing, but it was changing before the pandemic. The pandemic really just accelerated things, and it could be a good thing for our industry moving forward as we get into 2021. So one final slide on implications. Evolving first to meet changing needs as these audiences have moved almost entirely virtual. The carriers and providers who meet with them virtually and offer Zoom-like solutions are going to continue to earn a disproportionate share of these folks' business. One health broker that I spoke with mentioned vetting more new vendors, more new carrier partners in 2020 than in the previous 5 years combined. Why was that the case? Well, I asked him. He said that it was because they were looking for their partners who could meet their changing needs from a digital and telehealth perspective. He felt no one, at the time that I spoke with him, could do it, and he was casting his net wider than he'd ever cast it in his entire career. He'd been in the industry for over 30 years in order to find carrier partners to fit. There's a huge new opportunity for carriers and providers in these spaces to get new business right now. It's out there for the taking. They just have to adapt to what people need. And a big part of that as well is understanding that businesses are threatened. Even the most optimistic and well-positioned people that we spoke with are concerned about the future of their business, perhaps now more so than ever before in their career. Sales and new business support may be valued by these audiences. We all need to understand, I think, at the present time, with respect to this point on the slide, how many businesses right now are at risk of closing and never reopening, and to the extent possible, offer solutions to keep businesses afloat. As I was moderating these interviews, one thing I was expecting to keep hearing in these interviews was about, like on the group benefits and health side, for instance, or on the P&C side, premium deferrals and grace periods, and it never really came up organically as often as I expected it to. This is a non-finding that I'm talking about here, not really a finding, but the fact that it didn't come up implies to me that either it's not happening or it's happening and it's not being communicated in a way that advisors, agents, and brokers can talk to me about it in a research setting. Finally, product and service changes. This really depends on whether you're an insurance carrier, a financial services provider, an annuity company, a health insurance carrier. But depending upon where you focus, there are clear product needs. And it will be a tale, I think, in the next 12 months where those nimble and flexible companies that are first to offer unique solutions will earn a greater share of business in the short as well as in the next 3 to 5 year term as well. So folks, thank you so much for your time. Thank you so much for your attention. That's all I have here in terms of the presentation, but I'm happy to hang on the line for the next few minutes. Brad, if there are any questions, I'm happy to take them. So thanks so much, everyone, for your time. Thank you so much.